today. Well, investment flow is a crucial component of blockchain, and of course a major core connecting ideas that we see from Tracy, the actual technology application, let alone business opportunities. Our next panel on investment strategies designed for blockchain projects brought to you by our partners from CasperLabs, the famous Crypto Valley. I would like to give the floor to Tracy Trachsler, co-head of CasperLabs. Tracy, can you please come on stage? Tracy is the moderator for the session, and I will let Tracy introduce her esteemed panelists as we get the stage ready. Thank you so much. Good morning, everyone. We're quite pleased to have you here. I'm quite excited because it's not every day that you get to host a group of gentlemen on stage that are not only collaborating on multiple fronts, but that are also very, very good friends. So please join me in welcoming my panelists. First up is Ralf Glabischnig, founder of CBDC. We'll be joined by Josef Holm, founding partner of Draper Goren Holm, Saeed Darmaki, managing director of CasperLabs MENA. He's also the founder of Sheesha Finance. Hubertus Thonhauser, chairman of the Tezos Foundation, and Nikola Stojanow, GP at Meta Change Capital. As they bring up the numerous chairs that they'll have to move up, please give them a warm welcome. While we wait for them to get set up, I will quickly seize the opportunity to tell you a bit about CasperLabs and how we ended up here. As many of you know, we are proudly housed or have our main base in Crypto Valley, in the heart of Crypto Valley in Zug. And yet, earlier this year, we officially opened the DMCC Crypto Center together with our partners at DMCC because we see the potential in this local ecosystem. Crypto Valley has grown quite substantially over the last 2 to 3 years, so we now house over 960 companies in Switzerland, and we think the UAE can be even bigger than that. So over the next couple of minutes, we'll hear from these lovely gentlemen who not only invest in the space actively themselves, whether it's through startups and other projects, some of them also have close ties to different protocols, so they're quite familiar with granting resources to startups that are looking to build on a specific protocol. So I think this will be a very interesting discussion that we get to have. I think we're waiting on the last couple of chairs and then we can get started. Well, thank you. Thank you. It's quite nice. I don't know if you guys realized, but you unknowingly sat, I believe, in the order that I announced you in. So that's even better.
We try to keep it easy for you.
Thank you, guys. All right. First of all, welcome. Thank you for joining us this morning. Many of you attended, actually all of you attended last night's opening event. So we appreciate you being here earlier in the day. Thank you very much and welcome. I say we kick things off right away. Many of you have international roots, have been present elsewhere, but all of you now have very close ties to Dubai and the UAE. So I would be quite interested in knowing what it is that makes Dubai and the UAE interesting for both projects and investors.
Okay, thank you, Tracy, for doing the opening, and it's a pleasure to be here with my colleagues. We saw a presentation before which shows how it could be, and we have 5 people on the table. We invested in more than 100 projects in the last year, I would say, so we just did it. And Dubai is a great place to do that because everything what an ecosystem needs comes together. It comes capital, it comes infrastructure, and it comes talent. And when you bring these 3 things together, you can create big things, and we are on it here in Dubai. Joseph?
Yeah, So we are, first of all, excuse my voice, last night was the opening party and it was a lot of fun. We are a venture fund in the studio based in California. I was born and raised in Austria. I've lived in California for 10 years before I just, a couple of days ago actually moved to Dubai. And the reason is that this is the global hotspot right now for blockchain and investing. While the US, for lack of regulations and guidance from the government, is driving people out, and we've seen different industries saying, if we don't get the regulations we want, we're going to leave. Blockchain is actually the first industry that I've witnessed people leaving. I know this from our own portfolio companies that talk to me every day about moving either to Dubai or to Switzerland. So for me, as an investor, it was just a natural progression to be here, to expand to Dubai, set up a presence here, because they are building a future here, and that's something we can't miss out on.
I think this is one of the rare panels where I know everybody here very well. I think the main reason for people to set up here is people like us on this panel who've been heavily investing blockchain and crypto for the last several years. We are also supporting the ecosystem and the infrastructure here. We want to see projects and the ecosystem succeed here. So please reach out to us at any time you need any kind of support. The likes of Ahmed and Sulaim here in the DMCC, the different incubators and accelerators, and the regulatory environment is just set up for this. I think towards the end of this year there will be more clearer onshore regulation. Will definitely help a lot. But in terms of free zones and offshore, it's all very nice to set up. The ecosystem is definitely growing, and I expect it to exponentially grow over the next few months and the next few years. So we'll all do our part.
Yeah, thank you so much. I don't want to repeat what my colleagues just said, just maybe from a more high-level view. I came to Dubai in 2015, and in Dubai it has always been a place where they gave the infrastructure, the platforms for other people to succeed and to try out new things and to create their future. And I think the spirit has been seen not only in the current start of this blockchain ecosystem, but more traditionally also in the tech space. I mean, I've been in the tech VC since many years, and I came originally here to invest in local tech startups outside of the blockchain space, and now it's migrating slowly over. You see basically the same kind of enthusiasm taking over. Geographically, it's a big advantage. Obviously, you are at the crossroads of so many interesting markets, both from the supply and demand side. And last but not least, I think regulation is also something that helps. It's a very supportive environment. So, yeah, great place to launch new ideas and new projects.
Okay, so that's going to be hard not to repeat anything what you guys mentioned earlier, but if I would have to summarize it, I would go the following way. Building an ecosystem is incredibly hard. It takes a lot of work, it takes a lot of effort, it does take a lot of effort, a lot of talent. In our case, enthusiasm towards emerging technologies and just the sheer idea of changing the world, created innovation, this innovation created partnerships, these partnerships created friendships, and these friendships grew into very strong bonds. And this is why this group of people that is sitting here formed, let's say, a very, very good group that allowed us to help work positively towards the change in the GCC area, not only to also invite more talent and people into here so that we can do this together and build a larger ecosystem, create really a hub here in the GCC area to make Dubai #1 spot for blockchain.
Very nice. Now there's one word that I think every single one of you mentioned in your answer, and that was regulation, right? So you say that it's one of the key reasons why you're choosing to set up shop here, let's say. What I'd be curious to know then is, in general, how does regulation factor into the types of investment and growth strategy decisions or choices that you guys make?
When you invest in a company, you want to be sure that you have the rights on the equity, the rights on the token, whatever it is. Would I invest in a company based in China? Most likely not. to be honest. Would I invest in the company in the blockchain space in the US? Yes, we did, but it's a risk at the moment. So when we're investing into startups, we should think, how do we get access to the startup? How secured is our investment? And for that, we as investors looking for a place where the blockchain businesses which are built are in a safe environment and are not at risk to get taken out of the country in a few days, weeks, hours, whatever. That's my concern about regulation. And you know, regulation is not to stop businesses, regulation is to protect investors like us and the consumers at the end of the day.
Yeah, I second that. You know, the lack of regulatory clarity in the United States, for example, is a real issue when you set up a new crypto blockchain company and you don't know exactly what you're allowed to do and what not. You can't get a straight answer from the SEC, and not just as an investor, but also as a startup entrepreneur, you're at risk every day of them knocking on your door and taking down your business. It's just not a very friendly environment, and Dubai is working towards creating that framework that actually tells people exactly what they can and cannot do. So I'm a huge fan of regulation because it is just a guidance for everyone to play in a safe level, in a playing field. So that's one of the big reasons why Dubai is very attractive to us and also to our portfolio companies.
Yeah, I totally agree with you guys. Maybe I'll summarize and say, over-regulation stifles innovation, under-regulation doesn't protect investors and people in the market. So I think finding the right balance is very important, and I like to think that here in the UAE and Dubai, we found that balance, and I hope all the participants in the ecosystem feel the same way too.
And I think the way how regulations are being developed is also, I think, pretty unique. You're involved as an entrepreneur to give your opinion. It's not something that is basically imposed top down, but I have the impression that it's a more collaborative approach to learn, so that the regulators are trying to learn from the industry way more than in other parts of the world, and I think that's a good thing.
I mean, I've been part of the group when it came to writing the regulation for Liechtenstein, which was, in my opinion, one of the most advanced legal regulatory aspects that you have in blockchain. And the one thing that I very much welcomed was the open dialogue that we were confronted with. And I believe that here we have something very similar ongoing because, Saeed, as you mentioned, over-regulation, in my opinion, also stops innovation, but under-regulation just creates risk for investors, for token holders, and so on. So having a very nice balance when the regulator speaks with the innovators, it allows, in my opinion, a very, very good basis to create a playfield or a sandbox where you can thrive and where you can actually build a lot of good applications in a secure way.
Very nice. I think the collaboration aspect Hubertus mentioned in particular is something that has helped every jurisdiction that is making strides make those strides, right? Because they're actively working with industry participants. Now, blockchain is a bit of a unique space to be in as an investor, particularly because it offers various funding choices to startups in this space when it comes to funding a project. How do these dynamics affect the way that you as an investor or project or VC do business?
Of course, it's a big difference if you go into equity, into utility tokens or whatever behind that. And for me, you know, it's always we invest in teams. We never invest in an idea, we never invest in nice presentations. We invest in people and teams. Every startup will pivot 5 times until they're getting there where they want to get. Yeah? If you don't trust the team, and if it sounds too good to be true, it's not true. Quite simple.
Yeah, it's very interesting. You know, to your question, this is a space where startups have unique opportunities to raise money, right? So you can do token sales, you can go on a launch pad, you can do all kinds of things. And you know, us as VCs, all of us here, kind of have to compete with that. And what I keep telling startups is that when you look for an investor, don't just look for money, look for access and distribution. If a VC doesn't have a strong footprint in the community and a strong network that can accelerate your business, then you might as well just do something on your own, build your own community, and that creates a lot of competition amongst VCs. And I actually think it's to the advantage of the startups. So it's very exciting, and it's definitely a paradigm shift.
Yeah, I agree with the guys. I think the most important thing for a startup to consider is why you're choosing the way you're raising the money, why you're choosing the equity side or the token side, or you're going to do a mix of the two. And also, I think it's very important the price, you raise and what you're giving away correctly. To give away too much, not to give away too little, and make it fair for the investors as well. So I think, just based on your business model and based on what you want to do, that should determine, what you choose as the method of raising capital. And, there's so many ways of raising capital, but of course, smart money is definitely important as well. I agree with Joseph, but yeah, there's a lot of things to consider before actually going into a capital raise.
Yeah, there is certainly not a lack of funds around, a lack of investors. I think from traditional VCs to the blockchain space, it's a lot of VCs, a lot of ex-founders who turn into VCs, deploy capital that is not very helpful sometimes for valuations, which are being inflated in many cases. This is another problem we see in the traditional space more and more. But I think the beauty about how to fund and to bootstrap these blockchain projects in many cases is that it's not only about raising funds and you build your business top down like you did in traditional tech, but you really can bootstrap an ecosystem with these token models. And I think all these, since we're talking about the decentralized world here and distributed ledgers based, open source based projects, I think it's very important that together with bootstrapping your business, you bootstrap your community and your users, and that's a unique way that blockchain can provide, and as I mentioned here before. And that's certainly a big competition for traditional VCs in terms of funding, because now everybody can directly access these projects through exchanges. Information is very transparently available over the internet. The gatekeeping function of a VC is lacking, but on the other hand, you still might need somebody to advise in terms of protecting the investors and to make sure that you invest in the right projects. And I think that the form of the VC will change. I don't think that the role of an experienced, sophisticated investor will ever go away. It will just have a different shape.
I actually think that VC in general are already changing in a big way. And one thing that we are here, which is why also we're all here, is that times have changed. Money has become, in my opinion at least, the least important commodity when it comes to investing. Joseph, I think you mentioned that earlier when you said that you have to bring hands-on experience to a project. I mean, the uniqueness of our group at the end is that each one of us is a builder before an investment. So this hands-on experience, also being able to grow a startup, to scale a startup, and to be able to maneuver in this field is something that I've seen lacking in a lot of other VCs. And in this space, you have to continuously follow the method, because once you miss it, it is going to be incredibly hard to follow up on it again. When we look at launchpads and wallets, what we saw in the last presentation, for example, I know how long it takes to build something like this because I have previously built something like this. So that knowledge allows an advantage compared to classical venture capitalists, because you're inside of this ecosystem, you're part of it, and if somebody's lacking something, Ralf, you mentioned a team first, we can provide through the network the part that is lacking. That's why a closed-loop ecosystem for every blockchain venture capitalist should be one of the primary focuses. You need to be able to fill the gaps that a team has in order to allow them to grow faster and more effectively, in order to be able to reap the benefits sooner and faster.
Now, of course, all of you have been in this space for quite a while. In the meantime, you've seen an industry sort of blossom, and it now can look back on his first successful exits, IPOs, successful funding rounds at multi-billion-dollar valuations, as Hubertus already pointed out, iffy at times. But how has the reception of blockchain startups as an investment opportunity changed amongst investors in recent years with this track record that we now have to look back on, and who is still on the fence?
I would like to take this question from another side. We agree too much on the table, so we need to disagree now. And I disagree with the valuations in the blockchain space at the moment. You know, when a company in an early stage has a valuation of 100 million or $1 billion, then in that valuation is already the success of the next 5 to 10 years calculated in. And there's a huge risk that there will be no success. In a normal startup world, you start with $100,000, a few years later you get some more money and you grow slowly. And in our crazy space here, you start with 100 million and say, yeah, I need that money because marketing, ecosystem, blah, blah, blah. At the end of the day, 90% of those will fail. So be really careful when you invest in such projects. When we're investing broadly in a lot of projects. We know that 9 out of 10 projects will fail. Also 9 out of 10 of the projects we saw.
Not ours.
Huh?
Not ours.
Not ours, of course not. Because why not his? He's selecting already from 1,000. But we are happy when 1 of 10 of our portfolio companies is successful, and the rest is a full failure. So when you are investing in 3 or 4 projects, you got a high chance to get out with nothing.
So sorry, I have to agree with you again. Boring. So I would like to talk about Coinbase, because you were talking about IPOs, and Coinbase has done something very, very important for the entire space, which is proof of concept. A blockchain startup can actually go public and you know, deliver huge returns. My partner, Team Draper, and his son Adam actually was the first investor in Coinbase many, many years ago. And I think, to your point of valuation, they invested at a $20 million valuation. Back then, Coinbase was already up and running. They already had clients and everything. If I see those sky-high, crazy valuations, that's the end of my due diligence. Like, there's just nothing else to look at. Because just because there is a token, or because it's a blockchain project, doesn't justify crazy valuations. But on the other hand, now we know now that this space is able to produce unicorns and successful IPOs, and there are more in the pipeline. So that's a very important development. That's good for all of us, the entire space globally.
Ralf, I think what you mentioned, that phenomena was more common in 2007 with the ICOs. I think right now it's much more competitive between projects. There's so many great ideas, so many great teams, so many great founders out there. They're all competing against each other, and they know that if they overvalue their startup, then they're not going to get the smart money, because ultimately, what is smart money? Smart money is an investor who sees that they're getting something at an undervalued price, right? So if you're overvaluing yourself as a startup, then you're not going to get the likes of Draper, Goren, Holm, your Sheesha Finance, one of these entities that are going to invest in you, because they know that you're just pricing yourself out of the market. On the other side, I think when it comes to specifically in the region here, I think it's a much more conservative investor base when it comes to the traditional investors. They all prefer to invest in real estate. They're more comfortable with low-risk assets to invest in. But I think slowly over time, especially with the younger generation, you're starting to see them take on more risk. The institutions are definitely not as prone to taking risk. But I think it's becoming more open, and with the UAE nationals, I think myself, I'm probably one of the rare people out there that takes a lot of risk. But there's a lot of younger people that are coming out and actually taking the risk. So I think that's improving over time. But for us, specifically with what I'm doing with Sheesha Finance, we're looking to only incubate or seed projects. So I think if you incubate a project, it's the lowest risk because you know you're putting in effort and time rather than money. So I think if the startup fails, then at least you're not losing money, but you're losing all the effort and time that you put into it.
Yeah, I think if we talk about crazy valuations, I mean, I'm old enough to have experienced the dot-com bubble in the 2000s. This was exactly the same thing like the ICOs, with a big difference. This was all happening on regulated exchanges. And I think that's something that people forget today. I mean, when we speak about regulation, it doesn't matter to have the regulation, you also need to have the power to enforce it and to make sure that consumers are protected. There is a big difference, I think, between the dot-com bubble and the rise of the internet, which obviously created the Googles and the Facebooks and etc. The Amazons of today, and the traditional blockchain or the blockchain crypto space from the data. And this is the information transparency. I think back then it was still able for certain gatekeepers who have an information kind of advantage to the end consumer to hold back information and to scan these prices upwards. Today, I agree, obviously, there are many projects out there which it's all true, but on the other hand, you have super transparent information due to the internet. So every retail investor, in theory, can look up every information he wants to make sure and make his own due diligence. I think people get even more comfortable doing that. It's not that, like in the back in the days, you need to go to a banker to have some advice on a project, and the banker then tells you exactly what he believes is good because he's part of the trade. But today it's really a super transparent information available for everyone to make his homework and before making investment decisions. And I mean, in Enabling Future, which is my own VC fund, when we invest in projects in both traditional tech and crypto, like the Tezos project, which we've been backing early on, we look very much on the token economics. I think that's a very important point. It's very crucial that the interests between the founders, the investors, advisors, and the potential retail crowd are fully aligned. So I think a big red flag obviously is when there is a possibility for the founders to dump the token early. We look at long-term vesting schemes, we look at the people who have skin in the game, and I think the big art in this industry is to zoom out, because people are so short-term focused. Many people just are in this to get rich quick. This is not our view here. I would agree with my colleagues. We are here for the long run. I mean, Tezos project is a great example. We are really a long-term project, well-funded, all that, and we're not trying to hype the market, we're not trying to manipulate the prices like many others do. It's really about creating a long-term value proposition and executing over the long run. And I believe this will pay out because this is like it always has been in other markets as well.
I'm never sitting after you again on a panel, by the way, seriously. This is the third time that you've literally perfectly answered the question.
Next time you go first.
So I'm going to do something different in this case. I'll give you, usually I don't do this, but I'll give you a very personal example. When we co-founded Eternity back in end of 2016, we went ahead before raising any kind of funds or anything else. We were very, very clear on what kind of budget we would spend on in order to get where we had to get. We sat down and we really went into detail to figure out what would be the money that we would need in order to succeed. And I can tell you, in all honesty, that we started off with $60,000. That was all that we had back in the days. We pulled together. We were entrepreneurs. We had left other jobs. And from there on, there was two things that were important. There was a great idea, and there was continuous drive in order to push through. Our token, like our valuations back in the days, we were one of the first ones to actually raise funds through a token sale. And it was also a lot of luck and timing, which is one of the things that Ralf mentioned. It was just team, opportunity, and timing for me when it comes to investments. But nowadays, I still believe that everything is repeating in a cycle. You have a bull market where obviously people are going to try to get more out of it. But there's also a lot of teams, this is why I disagree with you guys, there's a lot of teams out there, they try it. Why not? There's nothing wrong with that. But if you can sit down in a proper conversation and you can dive deep enough with them and make them understand that their valuation either is incredibly insane or simply makes no sense when you look at the long tail of the token economy. And I've also spent a lot of good times with the entrepreneurs that were like, actually you're right, we should change that. And that, in my opinion, is something very important. When you look at a bear market, obviously everything decreases, and then it's perfect Christmas for everybody, actually in this case. But it is in a cycle, and we need to make sure that we are there also for the entrepreneurs, and we're able to educate them and help them not to make those mistakes, not to over-evaluate. So that if they listen, great. If they don't, good luck next time.
Now, of course, you guys look at hundreds, if not thousands, of startups every year. How has, over the past couple of years, how has the quality or the backgrounds of the players changed that are working on these different projects? And where do you see the most promising sources of blockchain talent and business ideas? Nikola, I'm going to do you a solid. We're going to start with you.
Thank you very much. Hubertus, I'm sorry. A lot of senior positions have appeared again, like senior developers, senior executives with 2.5 years of experience. Amazing. Can you repeat the question? Sorry. Now
I caught you off guard.
So focused on Hubertus again that I actually got lost my thought.
No, the question was how has the makeup or the quality or the background of teams changed compared to a couple of years ago?
I believe that teams have changed a lot because there is more experience out there, so that there's more sources.
I believe it didn't change. We just got older. That's all. We just got older.
You now have more code out there. You have more teams out there. A lot of similarities between them, so you can draw more information out of them. But besides that, I think people are still kind of very, very similar. But you don't agree at all?
The best is a diverse team. If you have some experienced guys in it, some developers in it, so coming out of all of the parts of the business development world. And we saw this in 1998, 2000, and we still see that today. So I believe it didn't change, and I agree to disagree. Finally.
Yeah, just to give a real world example, I mean, the Tezos Foundation, when we started in 2017 to launch the Tezos project, it was extremely hard to find, people for the administration part who are willing to work with blockchain, because it was kind of a shady, not really clear project. So, it was really hard to find, to convince people from the traditional industries to move over to the crypto space. This paradigm is completely shifted. Now it's actually the other way around. People are knocking the doors from traditional banking, from financial services to work in this industry, and they are even getting, those which are working for us, they are now getting poached by the traditional players who are building up their own crypto competences in-house at the more institutional level to hire these people from our organization. So I think that's a very good signal for how this industry is evolving. And at the same time, even on the academic side, you find more and more universities with crypto, blockchain kind of curriculums, and I think this always nurtures the deal flow, if you say, you can say it in that way, and the liquidity on the market for developers. And I think that's great, because at the end of the day, that's the foundation for this industry to thrive. It's the technology part.
I gotta continue on this. I'm sorry, I'm not finished with you, Ralf here. If we look at it on a factual basis, you're right. The paradigm in itself, not really, but the access to the space in itself and the willingness to join the space, this has changed over the last couple of years. Yeah. We're seeing now more senior executives with more experience are willing to join teams.
But why? I wouldn't call Tezos a startup. I would say Tezos is a scale-up. A big scale-up, probably a corporate with a multi-billion-dollar balance sheet and able to pay people from PwC and whoever joining the team. So a usual startup is, for me, the first 3 guys building something up. And then, of course, when you had a 230 million ICO and have some money on the balance sheet, the pros are coming because they see money there. But the real startup founders, for me, are still the same. The people who are willing to change something and get out of the comfort zone and starting something new. And that's the interesting one. Later on, we have all the others joining because I can have a nice salary and I can join that in a comfort zone already to a successful company. I mean, the people joining Coinbase now, are these startup guys? No. Those are the Goldman, JP Morgans and so on, joining them because there's a lot of money and we can make some money. But those are not the guys taking the risk in the beginning. That's a big difference.
I think I just want to jump in there because I think this goes back to what you said before about the market cycles, right? I like to invest in bear markets because those are the teams that stick with it, that keep building, that do the hustle and grind every single day. Whereas in the bull market, and we see this now in the NFT space, for example. All this hype just attracts those guys who want to get rich quick and who won't actually live through a bear market cycle and focus on building a quality product. So I think that's the biggest difference in quality of teams that I've seen. A lot more BS in the pipeline in a bull market and a lot more quality teams that are hardworking in the bear market.
I think one thing I'll add, the difference between the current market environment and 2007 ICO boom is there's a lot more layer 1 blockchains, a lot more layer 2 solutions. The infrastructure is much more mature, so there's a lot of different options and a lot of different ways that entrepreneurs and founders can actually implement an idea. So I think there's a lot more resources, there's a lot more experience in the market, a lot more maturity, but like with layer 1 blockchain, there's Casper competing with Tezos, there's Solana, there's Avalanche, there's so many really good layer 1 solutions, and I don't think that there is one single layer 1 that's going to beat all the others. I think there's going to be layer 1s that can do really good at specific use cases, and there's going to be others that are very good at solving other use cases. So I think there's a lot of options in the market compared to a few years ago when it was like Tezos and EOS and Ethereum. Nowadays you have a lot more third generation blockchains that are coming out, and there's probably going to be a lot more coming out as well. So I know we invested in one recently, and there's going to be several more that are coming out. So I think it's great to see that there's a lot more options for entrepreneurs to choose from nowadays in the blockchain space.
But on the other side, we don't need or we don't know how many layer 1 solutions we need. So how many search engines do you guys know today? So Alta Vista, who knows Alta Vista? Want to see a hand? I think this is only 5 people over there.
I agree that eventually there will be consolidation and layer 1 blockchain.
There will be for sure consolidation. And the question is, how big is this consolidation? And I believe that we will invest next year again in the beer market. What do you think, Josef?
I don't know.
He's spending your money already.
I'm kind of looking forward to it as strange as it sounds, but I don't know when exactly it will happen.
Good, I tried.
One thing I think is for sure that we will be able to talk about true adoption of blockchain when nobody will talk about blockchain anymore. So I think at the end of the day, what we all do is layer 1 solutions. This is basically a commodity. This is HTTP, this is the internet layer. I mean, who is interested in that today? What you're interested in is in consumer-facing application, use cases, and these kind of things. And I believe once we have that, reached that level, that we are serving the end user, we are resolving real problems and not talking about throughput and these kind of things, and finality and all this layer 1 language. I think this will be the moment when there is blockchain adoption and we're talking about really the next level.
I mean, back in the days, there were a couple of layer 1s, and everybody thought their blockchain would be the most used and most adopted blockchain it would be. Times have changed. We have seen that a lot more has come out, but more importantly, what we've recently seen was the actual acquisition from one blockchain of another blockchain, the Polygon RMS, which was incredibly interesting because that was something that when we started off, we were just dreaming about. Look at all the bridges that have been created between different blockchains. You can wrap tokens and trade between DEXs, and just the synergies and the communication between different blockchains and now interoperability just gives something that you mentioned very nicely actually. There's going to be different layer ones that focus on different things. There's not going to be one thing except Bitcoin, which is going to be like the backbone of the entire thing.
Yeah, just like with centralized databases, right? I mean, blockchain is nothing but a centralized database. There's many different centralized databases out there, and the notion that there's only going to be one blockchain is just silly.
All right, guys, I hate to break up the party, but we get to close things out with one final question. So we've talked about cycles, let's talk about hypes. Everyone's favorite topic, right? So over the past, let's say 1 to 2 years, we've seen a number of different topics that have come around that have received a lot of hype, from DeFi to NFTs, but where do you see the biggest potential opportunity as an investor? Or in other words, where are you paying the most attention?
It's great that I'm the first one because I take the DeFi topic. You know, we have seen in the regulated financial space, or in the centralized financial space, players like Coinbase or Bitcoin Swiss or Kraken and so on growing really fast. And I believe in 5 years we will be at the DeFi space where we are today at the centralized space. And this is really an interesting thing and really tough to regulate. So I'm looking forward to the regulations on DeFi. This will take another 5 years. But this is a real game changer, and we're looking very closely into that space.
So for us as a fund, we're early stage, pre-seed, seed, Series A. We invest in teams, not so much specific ideas or DeFi, security tokens, NFTs, what have you. I think there is a lot of upside potential in all of these different areas. So we really try to invest across the board. Personally, my heart also beats for DeFi. Blockchain is just really crappy for many of these applications that people try to build on it, but it's a perfect distributed ledger. So for financial transactions, it's just the best application. So it makes a lot of sense. But then again, I try not to limit myself by picking one. I try to look at teams and their ideas and then take it from there.
Yeah, I tend to agree. I'm use case agnostic, but I think perhaps maybe NFT beyond the hype of associating it with wonderful art and CryptoPunk, whatever you have out there. I think it's actually a really good use case for enterprises. I know from our work with CasperLabs and working with enterprises that we're actually using the technology and that part of it for enterprises, because it's not just for real world assets or fancy things. It's actually good for revenue streams, income. There's a lot of different tangible things that enterprises can actually use NFT for, and you're going to see that really come out a lot over the next few years. But yeah, I think in general, you look at the team, you look at the idea, you look at the business model, you look at the token utility, you look at what's going to happen, the long-term potential, and if it makes sense, then you should invest, rather than just focus on the use case.
Yeah, for a long time, or especially in the beginning, blockchain has been something like the solution looking for a problem. I think as a VC or as a tech investor in general, the first question you ask when you meet with founders is, what problem are you intending to solve? And I think this is nothing different to the blockchain space. So I think those areas where problems of mass markets or for captive audience can be solved, those will be the ones that will winning. And I see very short-term applications in the gaming space. I think the gaming industry will transform. There will be more decentralized gaming going forward. I think people or players will want to be part of the skins they buy or the content they want to basically use. Is currently in silos of the various developers. I think there's a huge potential for blockchain application and something we're looking at. And the underlying concept is the concept of an NFT, because what substantially will happen is that every kind of one of these skins or these characters, these avatars, they will become NFTs and tradable and be usable in certain games. And another very interesting element that I think is important for blockchain adoption and worth investing in, if you can and if you want, is everything that brings new audiences to the industry. So for instance, we have been investing heavily in partnerships with traditional brands like Formula One, sports, football, NFL, NBA, etc., to bring their fan bases to the blockchain for ticketing services, for merchandising payments, for creating NFTs out of digital content of these large brands, like we've done recently with Red Bull Racing and McLaren. I think that's going to be, it's not yet live, this will be launched in the next couple of weeks. But I mean, these are the things that will bring new audiences to the blockchain space and new use cases, and will propel transactions on the network, and be the basis for new assets that will be created. Because just imagine, this is to close my vision of the wallet in 10 years. You will have your digital wallet where you have your Bitcoin, where you have your fractional ownership of a real estate, and where you have also fractional ownership or the full ownership of an NFT that you can trade with each other and that you can use as a collateral to raise USDT or USDC or whatever to have this decentralized finance element. I think once these whole building blocks come together, then this will be a huge breakthrough.
The blockchain space, the investment space is still incredibly small, so the meta is continuously changing, and each one of you guys mentioned very valid points. Personally, I have an agnostic approach when it comes to blockchain, but what I'm most excited about in the near future would be pay to earn gaming, incredibly big opportunity in this space, in combination with DeFi, what we're talking about, what you earn, you can stake, you can get rewarded for that, or you can provide it in a matter of liquidity. And then a third party where we will be looking at fractional ownership when it comes to NFTs. That would be like a nice circle that I'm very much looking forward to, because the opportunities there just seem endless at this stage. And I'm very, very excited to see those things happen in real life and in action.
All right, gentlemen, I know your time is precious, so first of all, thank you so much for joining us here this morning. Thank you, audience, you were wonderful and so attentive. At this point, I'm happy to hand things back over to Olga, who will guide you through the rest of the program. Thank you, everyone.
Thank you, Tracy.
Bravo.